Hello, hi. Yes. Okay. Today, I just want to share with you a couple of stuff. The last 1 2 days has been excellent news for the market. You get the CPI inflation data. In June it went up to as high as 9%, 9.1%. And then, for the July CPI data, the Wall Street analyst was expecting at around 8.8%, but it actually dropped to 8.5, which is better than expected. Largely due to gas and oil price coming down. The only kind of negative things that you see from the CPI report is probably the food prices are still inching up like 0.1% each average. And yeah, I suppose the second quarter and the first quarter, the second quarter, as well as the month of July, which is the first month of the third quarter, market has been bashed down quite bad. In fact, many companies have oversold. There was just tremendous fear that the Q2 results would be bad. They call it a capitulation. You got a war, you got the geopolitical tension in China as well, and of course, it spills over to July and August for the geopolitical tension between China and US, especially after the Pelosi visits. Um, so basically, but you can see that China has just announced like a day or two ago that they have ceased the drills. And they have completed the surrounding Taiwan island. So hopefully, these geopolitical issues has kind of like reduce and hopefully gives a little bit more confidence to the market. So, but back to the CPI inflation data, definitely things are. It's the first time that the inflation rate actually drops in since November last year. It's been inching up from 4 to 5, 5 to 6, and then it goes all the way up to 9.1. Of course, I think USA is very insulated compared to Europe and China. China have their property crisis that's still happening right now. Let's just show you a couple of videos here. China is still sorry. China still have their property crisis, which is booming, and this talks about the military drills that they have ended. So, basically, there's been quite a bad situation whereby property crisis, where developers are unable to, claims from the purchasers, and all these homeowners stop paying their mortgages and all that. And developer, even though they are paying their mortgages or progressive payment to the banks for the construction, our developers are unable to complete. And it started from Evergrande, and then it kind of like spilled over to other places. Then, as you know, in community, the culture has always been to have a tremendous amount of savings in China. So I suppose Europe and China, you know, uh, I think US in a way is actually also a very good, and Canada is a strong beneficiary from the Russian-Ukraine war, because they are just coming in as the substitution to supply to Europe whatever Russia is no longer giving, or Ukraine. It could be grain, it could be fertilizer, um, and oil and gas, of course. Yeah, so this is something that you probably wants to take note. So, sorry, my computer is running very slow today. Um, of course, European winters are coming up where there's going to be, quite a little bit of uncertainty there, rationing of power and all that. The looking at the likelihood of Russia continuing to reduce or stop providing gas to different countries that are heavily relying on the gas from Russia, and of course, a majority of U.S. company are actually uh, benefiting from this gas production. But of course, I think they are providing about 1 million barrel a day over, but which is insufficient for um, the many European countries as a stockpile for them to keep, and so that they have a 90% and above stockpile so that they can last over winter at least, which is March next year. But of course, there's been a lot of backup plan as well. Firing up all the closed coal plants, and also reactivate this nuclear plant as well. Especially Germany has a couple of nuclear plants which they have closed down, and Albanian, there's a pipeline coming in as well. Norway and Finland, they are big gas and oil producer, are also stepping in to give uh, oil and gas to European countries. So basically, and you get the US midterm election as well, and if Biden has a lot of risk, which is to be re-elected in December, October, unless he can show that inflation has come down. So of course, we are kind of like within this prep period for Democrats, which is August and September. So unlikely there should be any bad news if Biden wants to be elected, so we can hide behind him. Of course, he has come up with a couple of acts, which is the CHIPS Act, which is signed yesterday. There's also stimulus. They call the Inflation Reduction Act as well, which is to reduce down medicine and all that, and which you will which will be reflected in probably August and September CPI data. And of course, he will continue to bring down oil prices and gas prices in the gas pump station. Of course, although his trip to Europe, to the Middle East and Venezuela, didn't really work out so well to get OPEC support to come up with more gas, oil to reduce the prices. But within his own backyard, he could actually just do that effectively. so so all this inflation cooling down and all that, also very important for the Fed to be a bit more mild in terms of, or they call it dovish, to increase another 75% basis point. It could be 50% basis point. They have done 75% basis points for 2 consecutive months, and and I think probably they will still try to hit a ceiling of 2% or 3, which at the same time, the Fed goes up in terms of hiking rates, and then the inflation were to taper down to probably 5 to 6, and it's off a bit, it's fine, I guess. It's definitely things are slowing down, but as you can see, stimulus was just given out so much during the 2020 and 2021, and financial standings and debt service ratio of banks and consumers are still pretty strong. Even though tech are reducing, doing pay cuts and staff count cuts and all that. There are other jobs opening over other places, like you can see the CHIPS Act. Arizona, there are just a lot of factories being built right now for chips. So there are just alternative industries, other industries that come in to support the employment jobs. That's why you can see in July, the jobs data actually went up to 500,000, which they weren't expecting that. They were expecting to be flat or 100,000 within plus or minus kind of range. So everything looking good, for the US market for sure. With the start of this CPI data and showing that inflation has finally dropped for the first time. I've been talking about it since May, so August is a very good month for all of us. So yeah, I hope you like the video, and I'll do a part 2 of this analysis and probably with a better video for you to see. Thank you very much. Please click a like and subscribe to the channel.